Well, good afternoon, everyone, and happy Wednesday. I am super excited today to have two special guests that I'm working with at the Acrisure team, and I am super delighted and honored to have my health broker, Adrian, and our compliance specialist, Miss Lynn. So I'm going to give them the stage right now for them to introduce themselves. So, Miss Lynn, do you want to give us who you are and what you do?
Sure. Thank you, Rocio. So my name is Lynn DiMaria. I have been working in this industry for 15 years, and I am a licensed health and life agent. And I work primarily with compliance and keeping all of our employers and employees in compliance with the DOL and the IRS.
Nice. And what about yourself, Adrian?
Hi, everyone. Good to be here. Adrian Howdiggy. I've been in the broker side of the business for about 16 years. And now Rocio and I work together with the same agency. So happy to be here, happy to connect with everyone. My experience has been about 8 years in the account management space prior to me being a client advisor. So back in my early career, I started very young in this industry. 8 years account management, and then now I have about 9 years as a client advisor doing new business, renewals, taking care of my clients. We have a team of 3 or 4 account managers behind me that help service all of our clients. And that's a little bit about me.
Well, thank you. And for those who don't know who Acrisure is, so Acrisure is actually one of the top brokers in the nation. They are one of the top five. I don't know exactly what number we fall under, but we write billions of dollars in premium annually. And we are very hands-on and resourcefulness. And what I mean by resourcefulness, I mean that we provide a lot of risk resources to our clients. And one of our main things is making sure that all of you guys are compliant. And as some of you may know or not know, when it comes to the state of California, there are very critical laws that you have to follow when it comes to certain sizes of of certain company sizes. So here we're going to be primarily focusing on what you consider. Well, what would you consider, Adrian? Actually, what do you consider a 50 employee company? Is that like
So,
the standard? Is there a specific name? I don't want to butcher it up because that's not my
no,
field.
no worries at all. So, any employer with more than 50 full-time equivalents is called an ALE, applicable large employer. And those employers, 50 plus employees, they do have to abide by the Affordable Care Act, no matter what.
Yes. So if you have 50 or more employees, you do definitely want to be taking notes because this is all going to pertain to you, and you want to make sure that you are following these laws so that way you are compliant, you don't get in trouble, and you don't pay these hefty fines. So going back to Acrisure, we have an in-house department that just specializes in focusing on this. And I'm going to go ahead, if you don't mind, Adrian, do you have the PowerPoint to
I do.
pull that up and share it with the audience? But
Yes.
as I was saying, so we have internal groups of teams that specialize in certain laws. So some of them specialize on the legal aspect, others specialize in the compliance aspect, others specialize on the human resources aspect. And it's all revolved around a network of brokers and specialists that focus on these certain areas. So what I do, I'm a commercial insurance broker and I only write P&C, which means workers' comp, general liability, excess, and everything that pertains to commercial and anything that's health related. I have people such as Adrian and Lynn who help me and help other clients with those lines of coverage and make sure that everybody else is compliant in it.
Correct. So just to kind of comment on that, every within the Acrisure family, everyone stays in their lane, right? So as Rocio said, Rocio, all she does is property and casualty. Me, myself, I stay in my lane. I do everything, employee benefits, life insurance, disability, so on and so forth. So that's where our structure is within the Acrisure family. We have partnerships. We work together as a collective team. and everyone stays in their lane. I know Rocio was talking about how big Acrisure is. So here in the slide we have our footprint that we have, and we're constantly growing everyone for our viewers. We have about 1,000 locations throughout the states and all over the world. You're going to see that we have Canada, we have Italy, we have Switzerland, Spain, etc. So we do have business partners and our offices in other countries as well. That's 21 countries. We have about 4.1 billion in revenue. That of course has grown over the time. And then to answer Rocio's question, we're about top 6 insurance brokers in the world. So that's where we highlighted there. So we're a pretty large outfit in the broker space. And then here's a little bit of the story in regards to Acrisure. We are the fastest growing company within Acrisure. As you can see, we started in 2005 and beyond. Of course, it's 2025, and we've been growing ever since. Okay. What Rocio was talking about is that we have a lot of solutions in our under our umbrella within the Acrisure firm. And just to kind of touch on a couple of things, what I highlighted, every client advisor, whether it be on the property and casualty side and on the benefits side, we all have our local account manager team. So of course, for our viewers, you're going to have me and Rocio at all times at your convenience. But we also have back support that's going to be doing all of the service, the day-to-day service. Of course, we do service as well, but most of the time our team is going to be helping with the day-to-day service with our clients. We have different things that we can do, cost containment when we go out to marketing. We have really good employee engagement and communication with the employee benefits side of the aspects. We have a lot of tools where it's a Ben administration to make open enrollment easier for our clients. Most of the time, some of those Ben admin systems where we build on your behalf, we can control it. And in most cases, we help with the day-to-day service as well with your new hires, open enrollment, so on and so forth. And then I think what Rocio was talking about is this slide here. This is our in-house compliance team, everyone. Jeremy and Deborah, they are attorneys on staff within Acrisure. So I have used them a lot over the years because everyone has a little bit of a weird, sticky situation sometimes when it comes to employees, FMLA, leave of absences, just any situation that you may not be sure on how to go about and handle that in a legal way to protect yourself as an employer. You can always come to myself and Rocio. And then what we do is we bring in Jeremy, Deborah, which is the managers of the team. They can talk to our clients. They can provide letters. They do a lot on our behalf. Most of all of their services are 100% free to our current clients. As for my experience, Deborah has helped me quite a bit on some of my sticky situations, and they've never been charged with my clients. She does a lot of heavy lifting for you guys. There's going to be some instances where there's going to be more heavy lifting on their behalf. There may be a fee, but I have not experienced that just yet. Okay. And then you're going to see here on the bottom, their supporting staff that help with everything compliance internally. Okay. So that's our internal team that we have on staff for anything Acrisure. And then this is some of the compliance that we also help in-house. But what we also do is we partner with Sterling, like Lynn, to do certain different things within our book of business. So some of the things that we're going to be talking about here are going to be ERISA, the Affordable Care Act, COBRA and their laws, Section 125, and some of the human resources aspects of things. So there's a lot to go over. We don't want to take too much of your time because we would be here literally for probably days talking about everything. But these are the most important things that we should concentrate on. And then moving forward on the deck, just to kind of give you guys the background, this is what I was talking about on Employee Navigator, the employee benefit admin system, the benefit administration, onboarding, COBRA can be integrated, so on and so forth. Okay. Can you guys see my screen okay, Lucia?
No, we actually got a comment from Armando Garcia. Is there something we should be seeing in the background of the black screen? So on my side, it is showing, but let me check on my phone and see why it's not popping up. It depends. So if you're viewing it from the desktop, you should be able to see it. I know in the past, some people have had issues with seeing it on their phone. So I'm gonna go ahead real quick
I'm
and
going
check on
to,
that. But
I stopped sharing. I'm going to reshare to see if that fixes it.
okay,
So let's see here.
Yeah, I couldn't see the screen either, but as soon as I saw Armando's question and then it popped up, I can see it now.
Okay, perfect. Perfect.
Mhm.
Okay. So as I was saying, guys, this is the employee navigator side of things. This is the benefit administration system that we can use for open enrollment. Believe it or not, there's a lot of clients that are still doing it the old school way with paper, and that can be a bit confusing. There's paper everywhere, and also, it's funny because back in the old days, how I started, and some of my account managers have started, we did everything paper, and it was very hard to read everyone's chicken scratch writing
Yeah.
for open enrollment. And now with these Ben admin systems with technology, it's made everything very streamlined, very easy to use. And this is a good thing because what we do after open enrollment is that we export all of your data to our clients because this data is yours. And it's very important that you guys keep the data. And we'll tell you a little bit why it's important a little bit later. But it's extremely important to keep your data for at least 5 years if you guys are a applicable large employer with 50 plus employees. So we'll get to that here in a little bit. Another thing that we do for our clients here is that we make you guys shine. Okay, so we make custom employee benefit guides, which is technically like a magazine style benefit guide. So instead of having loose paper of the summary of benefits, a Kaiser, an Anthem, or a dental policy, and this loose paper everywhere, we put everything in a very nice booklet. It's a magazine, and all your benefits will be in one spot. We can create that on a paper version, a QR code, a flipbook link, and also a link for you guys to distribute to your employees. Not all employees are in the same site, so you can distribute it however you want. Okay, so we have that capability as well. Um, and I think that's pretty much it, Rocio, for this deck. And I think it's going to be next is Lynn for her presentation. Is that where we're going to go next?
yes, we'll be discussing compliance, and I will let Miss Lynn take that over.
Sure. Thank you. All right. So I will just be talking. I don't have, we're not going to be showing anything. So don't worry if you don't see anything on the screen except for our three faces. That's what you get right now. So first off, I'm going to talk about premium only plans or Section 125 or cafeteria plans. It's all the same thing. It falls under the law of Section 125. Any employer that allows their employees to have their payroll pre-taxed to pay for any premiums, either for themselves or for their dependents, the employer must have these plan documents in place. And what it is it's to satisfy our good old friends, the IRS. And in the event of an audit, that would be the first thing they ask for, are plan documents. Your payroll company may ask you for that. Your payroll company may supply you with these plan documents. If they don't, you can go to Adrian. Adrian and I would work together and we would get you in compliance. If you are considered a safe harbor group, then those plan documents are good for, that's the premium only plan document. And that is good for 10 years. Unless you have an amendment during those 10 years, you just pay that one time for the 10 years. If you need non-discrimination testing because you offer cash in lieu of benefits or HSA accounts, or you are not giving each tier of your classes of employees the same contributions, then you would need to be having the non-discrimination testing, and that is called a cafeteria plan. So again, it all falls under the Section 125. So why is it important? It's because the Section 125 IRS code says you have to, if you're an employer, again, that allows their employees to have any of their payroll pre-taxed. The consequences if you don't have it are, in the event of an IRS audit, there could be potential fines for improper tax deductions. And that can go either way. If you did not allow them the pre-tax, or if you did but did not have this in place. And it's really good because it lowers the taxable income for the employees as well as for employers. That's less income tax you're paying when you're paying all your other taxes. We don't advise on tax. I could just say it at that high level. So that's the premium only plan. If you don't have one in place, you need to get one in place.
And then a question for you. So does the premium only plan apply to like a certain size of a group, or is that
anyone?
Okay.
That is for any employer group of any size that allows their employees to have their premiums pre-taxed. And even if the employer pays 100%, but they allow their dependents' premiums to be pre-taxed, they still need that plan in place. The only time is if they did not take any at all premiums pre-tax. Adrian, did you want to ask me something?
Yes, I wanted to add for our viewers for the premium only plan, everyone. It's going to be for medical, dental, vision, and some of our like Aflac style plans, like an accident plan, things like that, that can be taking the deductions, the premium deductions on a pre-tax basis, which of course will lower your taxable income. Of course, like Lynn said, we're not tax accountants, so we won't advise on that, but it will help you a little bit at the end of the year. There's a few lines of insurance that we do not recommend to put through a premium only plan, such as life insurance, long-term disability, critical illness, things like that, because you want to pay that post-tax, so the benefit will not be taxed like a life insurance policy. So I just wanted to throw that out there. That's all yours, then.
Yeah. So you wouldn't, just to piggyback off of that, you would not want your beneficiaries of a life insurance plan or those disability plans to be paying taxes. Because usually when you inherit that, if you're the beneficiary on any of those plans, that will be probably the only thing in your life you would not pay taxes on. So we would not want to put that. If I see an application that comes in that has that on there, I always go back and say, are you sure? And are you sure this is what happened? So thank you for bringing that up. All right, so we're going to go on to the next mandatory item that you need for compliance. And this product is the ERISA, which is the Employee Retirement Income Security Act. This is for groups with 2 or more people that you're offering benefits to. So all you need to do is have 2 people that you are offering benefits to, and the Department of Labor says you have to have an ERISA wrap plan document in place. This law was put into place in 1974. It's basically to disclose all of the benefits that you are offering. This is different than the other product we just talked about. The POP plan, the Section 125, satisfies the IRS, and the ERISA satisfies the Department of Labor. If you do not have an ERISA wrap plan in place, you are subject to some heavy fines from the DOL, and it's per employee. So
okay, and let me ask you a question from people that such as myself that I don't come from the health world and all of this. I mean, I've heard of it, but I don't know the fine details. So let me give you an example.
Sure.
A group of 20 employees, they don't offer any benefits because they think that they don't need to offer anything because they're not that 50 employee level. So someone like that doesn't have group health benefits, are they supposed to still offer this document that you're suggesting, or
no? It's only for groups that offer benefits to 2 or more people, because the whole ERISA wrap plan document actually is disclosing the benefits you are offering. So if you're not offering any benefits, then you wouldn't need that because there would be nothing to disclose. So, and that's a great.
This would be like a one pager, or
no, this is like about 23-page document, and yes, and at Sterling, our documents are guaranteed to pass a DOL audit because, again, like I said about the Section 125 plan, also ERISA would be in the event of an audit. They're going to ask for those two things because Section 125 is IRS and ERISA is the DOL. So with the ERISA wrap, once your employees have been past their eligibility, whatever that might be, 30, 60, 90-day waiting period to get their benefits, within that 90-day period, you must distribute these plan documents to your employees. So they can never say, I did not know you offered, that critical illness plan. Anything you offer goes on this plan. So whatever it is, the only time would be a voluntary product, and then that would go into a little bit deeper if your company offered you something, but then you had to go outside and do it on your own. I always say, if you're not sure, include it in your plan document. So
Okay.
it's being offered. Yes, Adrian.
So, Lynn, just to kind of make sure our viewers understand, there's two different things that we provide as a collective team.
Mhm.
Number one is going to be the employee benefit guide that we produce as your brokerage for open
Mhm.
enrollment. And
Mhm.
what with the partnership that Lynn and I have, she pretty much makes a Department of Labor booklet with all the benefits that we have in our employee facing guide into that special Department of Labor compliance booklet, if you will. Correct, Lynn?
Yes, and it's all language that is from the Department of Labor. If there is an update, because sometimes the Department of Labor will update some rules and regs, and then at our company, we would let you know because we are the compliance experts, and we would automatically update those plan documents for our clients so that we are constantly keeping you in the loop with that ERISA compliance. It's also very important to know, because I hear this a lot, people will say, and when I say people, I'm seeing employers will say, I already have that. And then they'll talk about their retirement plans, 401k. And I'll say that's different. So we need to make sure if you do not have a health and welfare ERISA wrap plan, which is all the things that Adrian does and that we do, all things health benefits, then you need to get one. If you say you have an ERISA wrap plan for your retirement, that is completely separate. So there's two separate things of ERISA and they're two separate documents. So you do need them. There are some exemptions for ERISA if you're public sector or if you're tribal or for churches. And the tribal part is there could be, if you're part of the tribe, then those people don't need, you're exempt from ERISA. If you are not, and you are basically a commercial employee, then that document is still needed for those employees. If you have any questions, you could always, go to Adrian, come to me. We can have a conversation on that and get that all handled. If an employee should request a copy of that, the law is you have to distribute that to your employee within 30 days of them requesting that document. So why is it
I have
important?
a second question. Sorry to interrupt you.
No, go for it.
So
Go for
for
it.
new hires,
Uh-huh.
I know each company has a different policy as to when people are eligible
Uh-huh.
to apply for their health group plan. So for new hires
Mm-hmm.
and how so if they're newly inside the plan, how long does the employer have to give them the ERISA plan after they've
It's
been enrolled? Or is there
it
like a
it's 90 days. It's
okay,
90 days. It's the same as if they just put it in now or whatever their eligibility is, but they have up to 90 days. So their eligibility might not be the full 90 days, right? Whenever they're eligible for benefits, though, that should be part of their onboarding package with HR when you're giving them everything else that they need. Um, and
And
again, why is
comment
it
on.
important? Because it is a federal law.
Mhm.
Um, did you want to say something, Adrian?
No, go ahead, finish.
Okay. And so again, this is different than an ERISA bond, because I've been getting that a lot lately. ERISA bond is required. It's a fidelity bond required to basically ensure it's for your insurance benefits. This ERISA wrap document is to disclose all of the benefit plans that your company is offering you. So if the following year, if you need to renew this plan, if you're under 100 people, you get the plan. We have plan documents for 5 years. But if during that 5 years, if you remove an offering, a benefit, or if you add a benefit, you have to let us know, and then we will amend your plan documents, and then you need to redistribute to everybody, because now your benefit offerings have changed. And the whole thing is, this is to disclose all the benefits. So we want to make sure we stay up to date on that. Or if you have an EIN change or a company change. Now, if you're a big group and you have affiliated employers under you, then we can, as long as you're the parent company, we can add everybody in this same ERISA wrap plan, and the same for the cafeteria plan as well. And we would do something called a joinder agreement, and then everything is in one. But you have to make sure all the companies are being offered the same benefits, because if you're distributing those to an affiliated employer that maybe doesn't offer medical, only dental and vision, and they see all the offerings going on there, that's going to be a false disclosure. So we need to make sure of that. And then again, the consequences if you don't have it is the DOL can impose any fines. And I will tell you, I get asked all the time, what's the likeliness of an audit? Well, if you have any employee that's possibly termed or a disgruntled employee, somebody thinks you're not doing something right, and they go to the DOL, the first thing they ask for, again, in these audits are these plan documents. And there are some hefty fines for it if you're not, in compliance. If you have 100 or more employees on the first day participating, enrolled, let's use the word enrolled in any of those plans that Adrienne talked about, then you need to do something in addition to the ERISA wrap, and that's called a Form 5500 filing. Again, this is also in the retirement space, but for us, it's for health and welfare benefits. So
And that only applies to groups that have 100 or more.
Participating in any plan, enrolled in any plan on the first day of the plan year, we need to do that 5500 filing. There are also some pretty stiff penalties on that. Those ones do max out. But again, it's to report something called the Schedule A, which is a whole nother conversation. But if you're a larger group like that, you want to make sure, if you have not done that, in the past, we do past filings, and we will get you up to date and in compliance. All you can do is get into compliance immediately that you realize you're not in compliance. So usually, people like the IRS and the DOL for all of these kinds of things, they will say, okay, you put in good faith, now you realize you need it, and now you are doing it. And we don't talk to the IRS on behalf, or the DOL on behalf of our clients, but we can give guidance on if you get some crazy letters in, that would be in a topic that Adrienne's going to talk about after that.
And then this question, for the people who don't know, because I was barely made aware of this filing about 2 years ago. And I see marketing, I see advertisement. I believe usually I've seen those advertisements around like beginning of January, end of January, notifying employers, hey, file your 5500 form. If you don't, there's hefty fines, but there's never any instructions on how to do it or who does it. And do you mind kind of like, because I'm sure there's a lot of employers questioning themselves, like, I don't know if I ever filed it, back in 2019. I don't know if my tax does it. Like, who does this?
Yeah, so it's a third-party administrator that would be doing it, and there's not many of us out there that do it. There's a lot of, you could do like ERISA online all day long, but not 5500 filing, because that's an actual secured, that goes through the DOL and all of that. I will tell you that the filings have to occur on the last day of the 7th month of your benefit plan year. So if
Okay.
you're on a calendar plan year, like a 1/1 to 12/31, then that is going to be due. That full filing in it doesn't mean you could like start it in July, but that's going to be due in hand with the final filing to the DOL by July 31st. If you're not on a calendar year, you would just do that math. The last day of the 7th month of your benefit plan year is when that would be due. And then you have to get Schedule A's from the carriers. Usually the brokers are really good on helping out, getting that information for you. And then there's some questions that are asked. You need to know, they want to know how many people have separated from your company during this year. How many people have either, separated, meaning retired, or on COBRA benefits, or they want to know everything. And then if they're not sure, to your question, Rocio, about, oh, I don't know if I did this, back in 20 whatever. So you could go on a search for 5,500 filings and a search to the DOL website. And if you go on there and just do 5,500 easy search, you could either put in the client's name. Sometimes if they're using a DBA, you may not find it quick enough. You could also search by EIN, which is perfect, right? And then it'll show you if they have or have not. A lot of times when people tell me, oh, they swear that they've already done this, I'll look and I'll say, no, see what and I'll do my screen share and I'll show them, you've done it for your 401k, but you've not done it for your health and welfare benefits. So you can go online and look to see what was the last year that you actually filed.
Okay.
Yeah.
Absolutely. A
Of
couple of
course
comments.
you do.
A couple of comments for everyone, in case, just to get a value added, service that we do. The ERISA plan docs, the SPD docs that Lynn creates. Rocio had a question that what do you do with new hires, right? So with our systems, it's a pretty easy and good system where any document that any of our clients, our employers want to add to our system, we can add it, and then we can make it where they have to view it. That way they can have in compliance with the Department of Labor. So as an example of that, we can upload our benefit guide that shows all the benefits that they have at their disposal. And then with the ERISA wrap and SPD, we'll upload that as well. And we'll make sure that the box is clicked to make sure that every single employee has to view those important documents. And that's how you distribute on an easy platform, the way you do it on Employee Navigator or Ease or any Ben admin system with any payroll companies. You can do that to make it easier. So we won't kill a tree and disperse it with all the employees. You can kill a tree if you want to, but everything is going paperless. But we upload that for our clients. It's pretty easy to use. And then the second comment with Lynn, I just want to make sure that our viewers understand that the ERISA, the premium only plan, COBRA, so on and so forth, this is a employer responsibility.
That's right.
This is not a broker responsibility like me and Rocio. This is 100% employer responsibility. Now, to further extend that between our agencies, me, Rocio, and Lynn, and that's why we partner with Lynn and Sterling. Just to give you a little commercial, everyone. I've worked in the industry for a very long time. We've worked with many TPAs that do the same thing that Sterling does, Lynn's company. And Lynn and Sterling by far have been the best one to work with. They make everything super easy, super simple. I text Lynn, I call Lynn, she's right there. So she makes everything pretty simple. So I just want to make that known that it's an employer responsibility. So between Lynn's company, which is the compliance company, and with our agency, Rocio and I, Acrisure, we help our clients put them into compliance with Lynn's company, and we have all the data to distribute to the employers and to the employees, but 100% employer responsibility.
And just to add to that, I walk everyone through these applications. We do a screen share. You would never be left on your own. Don't feel like, oh my gosh, this is crazy, because obviously the IRS and the DOL, nobody likes to deal with their mumbo jumbo, whatever. But I walk you through everything. I answer all your questions. I never break up with my clients, so you can always ask me something if you need it, and we can get it done that way.
And
So don't
Yes.
worry.
and also to comment on that, everyone will always have Lynn at your convenience, but she also has the same setup as how Rocio and I do. She also has her own account managers in house, so in
Yes.
case Lynn is out and about doing her meetings, doing her presentations, you will always have a dedicated account manager for anything that you may need in regards to the compliance team. She has her own staff behind her to help her with anything service related.
Yes.
And then,
And
Lynn, do you offer this service as like an audit? Because I'm just thinking right now, if there's
yeah,
like, I'm even questioning certain if certain clients and groups have this, but as someone who's a non-client, just a viewer, and they're questioning
yeah,
themselves, like, oh my God, like this is all so overwhelming. I didn't even know like I'm supposed to have this. My human resources was a person in charge, but we let her go 2 years ago, and now this girl's
yeah.
picking up.
Oh,
You know
that's
how
a
it is,
big one.
especially
Yeah,
construction, and staffing.
yeah.
People are moving around,
Oh,
juggling
yeah.
around. So much information that gets lost
Yes.
because you have all these duties, and in reality, the human resources could only do should only be doing only human resources things. But we know
Yes.
as small businesses, human resources is sometimes
We're
the vice president who's running payroll and
yeah,
running all these other things.
that's
Do
right.
you suggest like someone like that to do an audit and look at that? Like, does it affect them? Like, I guess my question is, when is a good time to do an audit? Is it like before you do your health benefits, your
It,
enrollment, or after?
so before, I recommend, I mean, and if you haven't done one and you're not sure you have any of these in place, the answer is immediately. Um, if you can't find any of these plan documents, then it is a good idea to put one in place. So, and very true. HRs a lot of times will turn and burn, and when they do that, they don't leave any information. Unfortunately, they just don't come back, and they leave everybody high and dry. And that's no offense to anybody, but that's the reality of it. That we hear a lot, and so now let's just get back. Let's just get you in compliance. Just if you think you don't have that, then check it out and see if you do. And if you don't, just call Adrian. He'll get you in touch with me, and or you can. I always like you to go through your broker first because it's to me that's very important. As Adrian, you'd really be Adrian's client and then become ours as well. So do that audit immediately. Find out if you don't have those in place, get them in place. Just very calmly, whatever, just say, hey, here they are. Here's the plan documents, passing them out to everybody. And then you're good to go. So the only time somebody, like I said, is it's going to be only in an audit. But to your question about would it be best before the benefits start or like before your benefit year, I always say do a whole recap. And I think Adrian is very good about the whole aspect of his clients. And that's why he works with me on this side, because this is the stuff he doesn't do. Like I don't do the stuff he does. So then we collaborate. And he does call me and text me whenever. And I do pick up because we're all about the client here. This is literally all about the clients and making it the best experience for you. So you don't have to worry about that ever. And then there's one more product because I know, like, I see our time clock kind of moving, and I know we got to get to a few other things. So, if I may move on to the last topic that I'm going to talk about is federal COBRA. So, federal COBRA is when you have 20 or more full time equivalent employees, FTEs, like Adrian spoke about earlier. You do not have to have 20 people enrolled in your benefits, but if you as a client have 20 FTEs, meaning you could have 18 employees, but full-time employees, but if you have two part-time employees and say they each work, 20 hours a week, so two of those people add up to one more employee, right? That's how they do. They fraction out the hours worked to see if you are, federal required COBRA administration. Now, I will say this. You do not have to have a TPA to do that. However, if you are administering federal COBRA in-house, you better make sure you are on point with all the DOL notices, all the new rules and regs. We all know when COVID happened, the CARES Act went in place in 2020, and that really brought to light, oh my gosh, when they had to go back and offer people that were laid off, the previous year, they had to go back and offer them COBRA. So if you have someone like us do it, we are keeping up and up on everything. If you have a termed employee, first off, let me go back and say what COBRA is in case somebody doesn't know it. It's a continuation of your health benefits, of your medical, your dental, and your vision. And you can also COBRA FSA too, if you have anything in your FSA account. So when you are termed voluntary or involuntary, and you are currently participating, enrolled in a medical, dental, or vision plan, those are the only eligible ones, no life, nothing else for continuation. Whatever plans you are currently on are whatever plans you can continue those benefits on until, if you're still on it at open enrollment, then you are also offered what all the active employees are. If you wanted to give someone a severance package because you feel bad, you had to lay them off, you could do a subsidy. You could pay partial of their premium as well. There is a 2% industry standard COBRA fee. So if you did no subsidy, your employees, if they went on COBRA, they would be paying 102% of that premium. So the 100% of the premium plus 2%. Their dependents would also be allowed to be offered it. In a divorce, your spouse could be offered it if they're already, participating in those plans. Now, there are some pretty big fines from the Department of Labor if you do
And
not
let
have a
me, let
COBRA.
me take a step back a little bit.
Yeah,
For those
sure.
who might question themselves and might not know if they're enrolled with COBRA or not, because I've had that come up in the past. Like, what's COBRA? Like, how do I find my COBRA account? And it had some scary situations where I found out employers weren't enrolled in COBRA, and they're like, "Oh snap!" Like, okay, what?
Yeah.
So how, someone that's asking themselves, like, do I have COBRA? Where do I go? How is it? Is that something that comes with the medical plan? Is this like something that Kaiser gives you?
Well, if you're state COBRA under 20 people, the carriers will take care of your COBRA.
Okay.
But for federal COBRA, which is what we administer, we don't administer state COBRA because the carriers do it, right? But for federal, the rule is if they don't have a plan in place, they should be knowing when that person gets their exit interview or their departure, whatever they want to call it in HR, they should be offered at that point to continue their health benefits if they are currently enrolled on it. If they're not enrolled in anything, then there's no COBRA for them to be had. Because again, that stands for continuation of those services. So if you never had any, you can't continue them. You know what I mean? Some people say they don't want it. They get another job, they get benefits, they go to the market, Cover California, the marketplace, or maybe they can get Medi-Cal now, whatever the case. But the employer is responsible for giving them this notice that says you are eligible for federal COBRA.
And then within how many days is the employer supposed to give that notice after they're terminated or resigned?
So the employee has 60 days to give that information, but the employer has 14 days to notify the administrator, which would be us if we were taking this on. And I always say, if because coverage continues to the end of the last day of the month, right? But if on February 14th that somebody's, that they're leaving on whatever day is going to be their last day, you would put in your Sterling portal. It's very easy. Again, no papers. Everything is, the only thing that's papers, and I'm going to tell you that in 1 minute. But but you're going to put this qualifying event, you're going to put that person in your computer, that employee. You're going to select the plans, because remember, you already have a plan in place that I've walked you through, that I've uploaded all your rates of all the plans that you offer. So now you're going to just click those plans that this person is eligible for. That immediately triggers in real time that COBRA notice to be sent to the employee. So they will get an email to them, but as well as the law is you have to send it USPS for real mail, right? So we always want to make sure we've got the correct addresses as well, right? And then, okay, one second, Adrian. And then when they get that notification, they have that certain timeline that, and if anybody wants a COBRA timeline, I have a nice form. So the date of the qualifying event, the employer actually has 30 days to notify us, but then there's another 14 days that that we have to give that information to the employee, but we're in real time. It goes immediately. You never have to talk to your termed employees again. Sterling takes it from there, because it could be awkward, right? To talk to a termed employee. The only time they would not be offered the continuation of their health benefits is for gross misconduct. And you could figure out what that might be. I had an example. I had an employer that had to call the police on their employee to remove them. And that's gross misconduct. But they offered it anyway because they were afraid of retaliation. So that's up to you what you want to do, but you don't have to. And that's all on the DOL. So then the employee, termed employee, we call them qualified beneficiaries or QBs, they have 60 days to elect, to say if they want it or not. We're communicating them already. All you guys do is just put that information in the computer. We take it from there. Now they communicate directly to our COBRA team, and they're going to tell us if they want to be on these benefits or not, to continue them, right? We would have to put them back on their plans if that's the case. And then they have like 45 days for the reelection after that. So there's quite a bit of time, but don't delay letting the administrator, us, know when somebody is termed, because all of this is very timelined by the Department of Labor. And Adrian, did I already cover what you're about to say?
A couple of things, yes, but I have a couple of service
Sure.
comments for our viewers. So just to
Sure.
make
Perfect.
sure you guys don't freak out and say, "Oh my God, this is a lot of work. What am I getting myself into?" So because this is going to be another Sterling commercial, is that
Thank
what
you.
we do here as well is that with our benefit administration systems, you can do it two different ways, viewers. You can do it on the Sterling portal as a qualifying event in that main portal hub, or if we're going to be doing the Ben administration system, what we do is we connect our system to Sterling system on the back end. So whenever an employer has a termination, our employers tell us, I terminated Adrian today on 3/5. Our team will go and terminate the employee on our system. That will trigger a qualifying event signal to Sterling's system, automatically streamlined into their system with all of the important information from the employees, their address, their social, the plan that they were on. So they automatically get that feed, Sterling does. And then what Sterling does is that they send out all the proper federal guidelines to that ex-employee via certified mail, because that's very, very important. The reason being is because there's some employees that say, they get the mail, they toss it, never got it, and then that can create a liability. Okay. So it's streamlined, it's good, it's easy to use when it's all connected to Sterling. And another commercial is that once all that's done, you as an employer on your main hub are going to have access to all of your qualifying events with past terminations in your portal. If you want to download, okay, you terminated me, you can download my forms onto your computer, onto your cloud, just to make sure you have proof that you did it. Because if you don't have proof, and of course in California, it's very pro-employee versus pro-employer. Okay, so that's a safety net that I do recommend to our clients. Every time you guys have a terminated employee, go into the Sterling portal, download that qualifying event information to show, just in case you have a disgruntled employee, you get an audit from from the departments. Nope, here is agent's certifications on the different forms that he has. I did it. He didn't answer on a timely manner, because as Lynn said, each qualifying event for an ex-termed employee only has 60 days from the date they were terminated to enroll into Cobra if they wish. Now, there cannot be a gap in coverage. So
Right.
if the employee, and we've had this happen where they try to go to the marketplace, they try to receive a subsidy from Covered California, they'll wait all the way until the 55th day to enroll onto Cobra, thinking that they're going to be charged moving forward. Okay, and that's it.
Mm.
When they get that really nice, pretty bill of 2,000
Retroact.
retroactive, two thousand
Yes.
dollars, $2,000, that is the penalty, if you will. It's not a penalty, but the employees don't know that there cannot be a gap in coverage. It has to go back to the first day when they were terminated, and then begin from that Cobra until 18 months. Okay,
Yep.
so
And
that's
let me ask you: is this something that the employer could assign on the account, or like it's like because it's the employee who signs up for this, right? They get the notice, and they're the ones who are responsible for logging in. And 'cause I'm talking from
Yes.
experience as well. You know, there people come back like on the 58
Yeah.
days, and they're like, hey, you know what? By the way, um,
and then they have 45 days after they're
To
elected
retro.
to
To
pay. So technically, they'll have 3 months of retro
yeah.
pay to go back to the original
Yes.
state of Cobra. So if you know you need coverage because you have a health condition, enroll
Mhm.
yourself day one. That way, it won't be a heavy load to go back and pay hundreds of dollars or even thousands of dollars retroactive. Us as brokers and TPAs, this is not our rules. Okay, these
That's
are
right.
rules of the federal government. We didn't
Federal.
make these
Yeah.
rules. So what I also wanted to tell you guys is that think of Sterling as the middleman. Okay, so you have the client, you have the broker, which is us, and then you have Sterling. Okay, so between all three of us will be your safety net, if you will, because everything should be in compliance. We'll be sure to take care of you guys, but it's very important that I highly recommend that you do have a Sterling in place, because what happens is that they'll communicate to your ex-employee. They will they will assist with payment as well. So the employees can either send in a check, or they can pay by ATM online. And Lynn and her company are going to collect payment for that ex-employee. They will collect it, and then they will send it to the employer to make sure you pay the bill. Now, on another layer on that, in some instances, the benefit administration systems will be connected to the carriers, or Sterling will be connected to the carriers to automatically enroll that ex-employee. In some instances, that doesn't happen. Okay, so if Sterling will send over to HR, to the business owner, a notice. Okay, oh, you have a termed employee. They will notify the employer, Adrian wants Cobra. This is what his gonna start date's gonna be. Advise your broker or turn the benefits back on for that Cobra election. What happens after that is that every single carrier has a Cobra section on your bill. Okay, so it would be awesome if it was direct to consumer, where Cobra will be directed to the employee to the carrier. That's only for 20 and below lives on small groups. Anything else, there you either do it in-house, collect payment, or you hire a Sterling to do it. And Sterling is very reasonable in their administration fees, in which I highly recommend let them do it, because the Department of Labor is constantly changing their letters.
Mhm.
It can be a little bit of a headache. We are not. No one is a Department of Labor expert, but
That's right.
Lynn and her team are. They're constantly updating everything. So that's why we partner with them as well, because there should not be any liabilities in regards to that. Okay.
Okay,
So
and then let me ask you, because right now I'm just my head is going like, well, what about the disgruntled employee, the person that gets terminated, but they have, I don't know, diabetes, high blood pressure, have issues, but they don't enroll until like, I don't know, 3 weeks later because they were busy applying for jobs and life got to them, but now they need to start because obviously they need to get their prescription and their medication from the pharmacy.
So two comments on that. Yes, as long as they enroll, within those 60 days, those claims are going to be covered. Okay.
Okay.
Because it's going to retroactively again back to the first date of loss of coverage. If they wait until a month, 2 months, or 55 days or what have you, they're going to be enrolled. They can submit their claims for their diabetic medication for whatever it may happen, those services. They can submit a form and they get reimbursed because the claim will be covered. Okay. Another comment that I wanted to make in regards to federal COBRA that's extremely important, everyone, is that I lost my train of thought. Okay, so you do have to abide by the COBRA rules and make sure you have those checks and balances with your employees. The reason being is because if you terminate me today, as an example, okay, you do not offer me COBRA as an employer responsibility. Next month, I'm diagnosed with cancer and no one offered me my federal guideline plan to continue it. The employer could be responsible for my cancer claims because the employer didn't offer me my rights for COBRA to continue my plan. Does that make sense?
It's very important.
Very
And
important.
that last statement didn't kind of put an urge to have it done, then I don't know what is, but
Why
it's
is
I guess let me make sure so the audience understands. So, like, let's say I quit my prior agency a month ago, and then God forbid, I have a diagnosed with cancer, but I didn't receive this notice. Now I'm like, oh, like, what do I do? Um, so at that moment, does the employee reach out to the employer? Is this like when the
yes.
attorney gets involved and there's a claim?
They should reach out to I recommend they reach out to their HR first and foremost. And then if they already have, I mean, a lot of people can't afford attorneys. So I would first and foremost go to my HR and say, make this right. I wasn't offered this, make this right. If they didn't make it right, then I would see where they would want to seek some legal help. Because that could be like, and even if they had legal advice, like an EAP plan while they were employed, they don't have access to that anymore because EAP is not a COBRA eligible benefit. So we want to make sure that, they would go back, instruct back to their HR. But for all the viewers that are listening, we want to make sure you as an employer on your exit package with your employee that they know they are going to be that this is an offering if they are eligible, meaning if they are currently enrolled in medical, dental, and or vision plan, and maybe they just want to take one of the plans. Maybe when they find out how much it costs, because Sterling's going to, in our letter that we send them their payment schedule. So they know right off the bat, there's no surprises. They know right off the bat what they're going to pay. So then they could help them make the decision. If they do have a spouse that they can go on, would that be cheaper to go on the spouse, or maybe try, if they're eligible for Cover California, Medi-Cal, any of those things? They do have options, but they just have to be offered the continuation of the current plans they're enrolled in. That is the law. And it's there's some pretty big fines with that too. And in addition, the disgruntled employee, they're probably already going to the DOL anyway because they're upset, right? And so they're going to just start popping off everything, wrongful termination, blah, blah, blah. Even if it's not, how people get desperate, right? And that's just the reality of things. So just be in compliance. You need to have a POP, an ERISA, Form 5500 filing if you have 100 or more, and you need to have federal COBRA. And we're here to help.
Correct. And
And if
just to
there's
make,
any other questions, you guys can always ask us at another time too, offline, a certain situation, and we're here to answer those questions as well.
thank you, Lynn. And just for one more comment on the Cobra aspect of everything, guys, just to make it completely clear and to give you an example of that. We were talking about 102% of the premium. Okay. It sounds like a large number. Sometimes it can be. So, as a quick example, employees don't see, most employees do not see how much healthcare costs because the
Mhm.
employer will cover the majority of the premium. Okay.
Mhm.
Example of that, if your employee only rate is $600 a month, okay, you don't see that because you have a payroll deduction or if it's covered at 100%. So if you only have a $100 deduction per month, that's what you think it costs to you specifically. So what that means is that 102% is whatever the employer is paying on the bill for you as an employee. If it's $600 payment for you employee only, it's $600 plus 2% of the 600. That's
Mhm.
what 102% means. So you're going to pay 602 as an or 606 as an example total cost because you pay 100% of your own premium. Your employer is not going to help you with those premiums anymore because you're an ex-employee plus the federal guideline of the 2% administration fee. So I just wanted to make that clear for our viewers in case everyone's like 102%, that's crazy expensive. So but you will see the total cost of what your employer was paying prior.
And that will be shown on the payment schedule. It'll be, there's nothing to, there's no hidden nothing. It's right out there, very clear what they, and with all the directions as well. And
Another
lastly, on that, if they don't pay their premiums to Sterling, then they get a 30-day grace period because that's the law, because it's in arrears, right? And we are going to notify, depending on what kind of services you have with us, as Adrian mentioned earlier, we'll either notify the carriers directly, hey, they haven't paid, stop because we're going to ask them multiple times to pay, right? If we haven't received their payment. But we're also going to let the client and the broker know as well, because we don't want that client to keep having those premiums on their invoice, because that person will be as a Cobra on a Cobra line on their employer invoice. And we don't want the employer to be paying for something that the employee is just not paying anymore and been warned. So I just want to say that too. And that's it for me.
very good. Thank you, Lynn.
You're welcome.
All right, and I think you're gonna briefly discuss, Adrian, about the penalties.
Yes.
Pay or play. I think that's how you call it.
That's what the slogan is, play or pay. So I'm going to show you guys another screen here, and hopefully it doesn't turn black again. So let's try it again. All right, let's try it again. Here it is, everyone. Okay, can you guys see that now?
Yep.
I can see it on my end.
Okay,
Me too.
perfect. Okay, all right, viewers. So this is purely for educational purposes. This is not to scare the bejeebies out of you guys. This is very that it can be scary, but with our teams collectively, Rocio, myself, and Lynn, we make it pretty easy for you guys. Okay, so we're going to be talking about here briefly because I know we're almost at time. Um, play or pay. I highlighted that. That's the slogan of the Affordable Care Act.
Maybe we can zoom in a little bit just because like some of the words are a little, yes.
Okay, very good. Is that good now?
Maybe zoom in like a little bit more so you can see the bolded ones. Zoom out.
Zoom out. All right, there we go.
Yeah, that's good.
Okay. So play or pay, that's the slogan of the Affordable Care Act. Just so you guys know, of course, Mr. Obama made all these laws. Okay, the nickname for the Affordable Care Act is Obamacare. Okay, and you guys,
Sorry. It's, I guess their screen is still showing black.
I think it's on LinkedIn for some reason. I think everyone else is okay.
Okay, let me figure that out. So you know what, we will share after this the two screens. I think we shared three screens,
Right.
slideshows. I'll make that available on my LinkedIn page
Okay.
for you guys to release. That way you could have a copy of it.
Okay. So I'll speak to it. I think everyone else can see it, but I think LinkedIn is having some issues there. So player pay, Mr. Obama did the slogan. So what that really means is that you play the game and you provide healthcare to your employees.
We're good now.
Oh, we're good now. Okay. Thank you guys for commenting. Appreciate it. So you play the game and you provide healthcare to your employees of the offering. Okay. Or you pay the penalties that are going to come from the IRS. As you know, money is going to come out one way, shape, or form. It's either you pay the premiums for your employees and have happy employees, recruitment, retaining, so on and so forth, or you're going to pay the penalties because Mr. Obama implemented those penalties. The premiums that you pay for the premiums for your employees are a tax write-off, of course, for the business. The penalties that you pay to the IRS are not a tax write-off. So technically, you'll be burning your money away into the IRS system, and they're going to be charging you for those penalties. Okay, so it's pretty easy to understand, everyone. There's two main penalties with the Affordable Care Act, also known as Obamacare. Penalty A is if you do not offer employee benefits. Okay, so if you do not offer employee benefits, a applicable large employer here, an ALE, will be fined for 2025 $2,900 per employee that you do not offer insurance to. Okay, it can add up very, very fast. I'll give you an example of that. Okay, here's a quick example that if someone has 100 full-time equivalents, okay, the government subtracts 30 freebies. You get 30 penalties for free. Okay. So you're left with 70 employees to pay the penalty at $2,900. So your penalty would be $203,000 to the IRS. And of course, that's just an estimate because with employees, they go up and down with terms and additions. So that's just a quick example. So $200,000 down the drain to the IRS. I don't think anyone would want to do that. I think that they
And
would
then,
want.
Adrian, this penalty is addressing if the employer is not paying the correct copay or the correct amount into the plan.
So we'll get to that. That's a different penalty.
Okay.
This penalty A is strictly saying I don't care about the Affordable Care Act. I am not going to offer benefits to anybody in my company, and
Okay.
and they're going to pay $200,000 to the IRS because I don't want to do it. Okay. Most employers don't do that. They would want to reinvest that $200,000 back into their company, back to their employees to make them happy, and it's also a tax write-off. The
Okay.
200.
So it's safe to say for employers that have 100 or plus employees that if the IRS or the government were to do an audit, they could be fined up to $203,000 for not providing a group health plan.
You got it. You got it.
So everyone out there who has 100 or more employees, you're not offering a group plan, please pay attention to this. You don't want this money down the drain. And
And
it
also,
starts off at 50.
yep. And so like you saw, the magic number is 50, everyone. That's the magic number. So what I want to be extremely clear on this is this when Obamacare came out, a lot of the industry said, I'm going to make everyone part-time because I'm only going to have 10 full-timers and we're not going to offer benefits because it's too expensive, right? So what happens there is that I've dealt with clients that have, say, 30
Well, this is
full.
important because of the staffing. I have, a large staffing audience, and staffing is a lot of part-time, full-time people.
You got it. A lot of the times they only may have 30 full-time employees, truly full-time employees, but they have 800 variable hour or part-timers. Okay. So for easy understanding, there's a little bit more to the formula, but for easy understanding, for every two part-timers equals one full-time.
Right.
Okay. So if you have 30 full-timers, but you have 800 part-timers, you're going to be over the 50 mark. Okay. So what that means is that you have to abide by these rules. Even though you have 800 part-timers and 20 full-time, you still have to abide by the rules because you're going to go over the 50 magic number mark for the full-time equivalents. That's very, very important. Okay. So just as a quick, another example, 50 lives, you subtract the 30, you have 20 penalties, you're going to be paying the IRS $58,000 year after year until you provide benefits. Okay. Now, back to Rocio's question, penalty B. Okay, so there's two penalties. Penalty A is if you say the hell with insurance, I don't want to do it, you're going to be fined that those fines that we just discussed. Penalty B is that an employer, again, the employer responsibility is that you cannot charge an employee only cost more than 9% of their income. Very, very important, guys. Okay. So you can use a couple of safe harbors, but the gist of all this is that an employer cannot charge more than 9% of anyone's income. If you do, and you are caught by the Department of Labor or the IRS, you will be fined. Okay. The fine is down here. So this is penalty for not offering affordable coverage. Okay. So if you're not offering that affordable coverage and meeting that 9% rule, and just as a disclaimer, every single year those numbers change. Last year for 2024 was 8.39. This year is 9.03. So every single year it's changing a percent or two, give or take. Okay. So for every person that was not compliant in being affordable, the employer could be liable for a 43.50 penalty per employee. Now you're going to ask, how are we going to get caught? Okay. This is you only get caught if an employee goes to Covered California and receives a premium tax credit, which is here. Okay. A premium tax credit is basically government aid, financial aid based upon your income, household income, and your family size. You can be eligible for a financial aid from the government from Covered California. So there's two main questions that you have to protect yourself. Okay. When employees don't listen, they don't care, they don't know any better as well. They say, okay, well, I'm going to pay $150 for my employer insurance, but if I go to Covered California, I pay 50. Okay, so I'm going to go Covered California. What they don't know and what they fail to understand is that as long as your employer is A, offering you benefits, and B, making it affordable per the law, the employee that received that tax credit from the Covered California is not eligible for that tax credit because your employer made it affordable to you. Does that make sense, Rocio? Yeah?
Yes.
Okay. So how are you going to get caught, right? And then before I display something else, I want to show you guys a couple of examples. Okay. So there's a couple of safe harbors that an employer can choose from. The most common is going to be rate of pay, which is here, rate of pay. And of course, you cannot exceed more than 9.02% of the income. And for an easy understanding, okay, if someone is making $20 an hour here, okay, the maximum an employer can charge is $234.
Kate asked if you could repeat yourself, please, on the affordable, on the 9%.
9%. Okay. So there's a few safe harbors, everyone. A safe harbor is a measurement period where you can decide what you want to have on your safe harbor for affordability. So you can do rate of pay, which is an hourly rate that you see here. These are everyone's hourly rates. So as an example, it's $20 an hour. If someone makes $20 an hour, an employer cannot overcharge more than $234 per month on a $20 an hour rate. And as you can see, if someone makes $25 an hour, it goes higher. Okay. So depending on your contribution strategy and the age of the employee and the benefit design, there's a lot of factors that come into this. Okay. I always make a joke, we never, after high school, we never used algebra, but with the Affordable Care Act, we use algebra now. So again, to make you guys feel safe and comfortable with our systems, we have safety nets where we can tell our system that you are not going to charge this employee more than 9%, regardless of the contribution of the employer. Okay. We see a lot of issues when it's a minimum contribution, such as 50% of the employee only. So that's the bare minimum an employer can contribute towards their premiums. Now, if we have an older if we have an older individual, say 55, 60-year-old working, those employees are going to be high premiums. As an example of that, if that person is making $20 an hour and the employer is only sponsoring 50% of the premium, so you cut that in half. If it's a $800 premium, it's 50% is $400. Now, are they compliant? They are not, because they're overcharging by $200 based upon this number here. Does that make sense? Yeah? Okay. So that's how that works. Now, our systems have that safety net. So that older individual that has a high rate because they have a Cadillac plan, okay, it will automatically reduce it to the 9% of their income to 230 to whatever it may be. It automatically lowers it. So in some instances, the employer is going to be paying a little bit more for that older individual than the youngster, because the youngster is going to have a $300 rate. Half of that is 150. So they're in compliance all day long. Okay. Every time someone is out of compliance, you can be liable for that $4,000 penalty here. Okay. I'm going to show you a real life example. Before we get to that, though, there's another safe harbor that you can choose from. Okay. The top one was rate of pay. The second one is safe harbor for a W-2. So as long as you go box one on the W-2, say they make $50,000 a year, okay, you can get that calculation of 9% of that $50,000 and it's divided by per month, and that's what would be your affordability. Okay, so you can use rate of pay or W-2 income wage. There's another safe harbor here, that's the federal poverty level. No one ever uses that one, so we don't really talk about that. We talk about the W-2 and the rate of pay safe harbors that you always have to be compliant with that 9% rule. Okay. Um, what I wanted to show you guys after that is a real life penalty letter. Okay. So this is one of our current clients. I deleted everything for privacy, but this is what it looks like. Okay. This is coming from the IRS. This is the tax year of 2021. So as you can see, I received this one last year in 2024. The IRS and the Affordable Care Act departments, they're in the rears. So you may think that we're cool 2024, 2023, or what have you, but they're so backlogged in audits that this is a 2021 audit. Okay. So as you guys can see here, I'll make it a little bit bigger. Oh, too big. Here, you're going to see that the potential penalty for this client is $190,000. Okay. Because supposedly they didn't offer affordable health care. Okay. So what I like to call are my liars. These are these people that lie on Covered California. Okay. So I want you guys to see a real life example of a penalty letter. They can be very scary. $190,000 down the drain to the IRS. It will hurt the budget of the company. Okay. So as I said, the premium tax credit is here. There's a lot of verbiage that we can go over, but we won't go in too much in detail. Again, here's the $190,000. What I want to show you guys is the people that I call the liars are here. Okay. These people, they went to Covered California and they received a premium tax credit, financial aid from the government. So what they did is that I blocked out their socials. So they have supercomputers now that will track the socials back to the employer of that year and say, well, your employee that worked for you in 2021 said you don't offer coverage and you don't make it affordable. Okay. The IRS is a show me, don't tell me. Okay. So it's very, very important, everyone. So I'm going to stop sharing now. Well, I'll keep it up so you guys can take a visual of that. But it's very, very important, everyone, that every single year you guys have a active enrollment. There's two types of enrollments, an active enrollment and a passive enrollment. An active is you make everyone sign something for a few reasons. Number one, to acknowledge the new premiums, if there's any payroll deductions, to acknowledge that the plan changes, if any. And also, if there's employees waiving, that those waivers are absolutely gold for the employers. Okay, I cannot stress that enough. The waiver forms every single year is gold. Okay, because if you do not have those waivers for those liars that that I showed you guys, the people that were dishonest and went to cover California, then if you don't have those waivers, that penalty the employer has to pay. Okay. So what happened in this circumstance? What we do for our clients is that we export all of the data, provide that to you guys every single year on a secure link. All of your data is there. It's your data, not mine. We also house it in our cloud system year after every single open enrollment and new hire. Okay. So what happened here is that the employer and us had all the waivers for those employees, but they didn't want the insurance from this employer. So our legal team that we showed you earlier within Acrisure, Deborah, she writes up a lovely letter on behalf of our clients. Letterhead, you guys sign it as an employer. We attach all of those waivers, proof that these dishonest people waived my insurance and I did make it affordable. So that penalty of $190,000 is completely wiped out from the employer, and all the penalties go back to the employees, and they have to pay back all of the financial aid that they received from the government, plus penalties, plus interest. And we all know how the IRS works. Um, it won't be a nice letter for those employees. So on that tax year, they had a pretty big surprise because they have to pay it all back, everyone. So that's why it's so important that you conduct a active open enrollment and always secure your documents for a minimum of 5 years. A minimum of 5 years. Because as you can see, they're in arrears. Okay. So that's a really, really big deal for the Affordable Care Act. A lot of employers don't believe that these letters exist until I show them one or until they
Oh,
get
yeah.
it. Okay.
I've seen one for $2.2 million
It
for
is,
an employer, and that was
yep,
about 4 years ago.
yes,
And
it is for
yep,
real, everyone. It's not a
it is
joke.
for real.
And a little thing that I like to say, and in order to protect our employers, is that it's not if you get a audit, it's
Hmm.
you get an
Right.
audit. Because us as brokers, um, you guys as employers, you guys cannot control what your employees do outside of the workplace. They can go to Cover California. Their wife can be saying, let's go to Cover California. It's going to be cheaper, so on and so forth. So that's what happens full circle in a nutshell. There's a little bit more to it, but because of time, um, that's what a letter looks like on the penalties. Okay. And last but not least, another thing with compliance wise with the Affordable Care Act, we're just going to talk about this here, the IRS forms 1095Cs. Okay. So what happens with this, think of the 1095C as a W-2 of healthcare. Anyone that worked for you for 10 years, 2 months, 6 months, they're all supposed to get a 1095C to their home. And again, the employer is responsible for the 1095Cs. Okay. They have to communicate to the IRS on who had insurance and who did not. And again, this is only for employers with 50 plus full-time equivalents. They mandatory have to do this. Okay. If you don't, there's some fines there at the bottom that we won't get into much detail. But the 1095Cs, it could be a little bit of a pain if you don't have the proper software like our Ben admin system, so on and so forth. We have different partners that help with that because it is a very tedious assignment. Your eyeballs will go cross-eyed if you try to do it on a manual basis because there's so many boxes to check, so many different codes that they have to put into those special forms and then file it with the IRS. Okay, so between my team and our Ben admin system, we do use different third-party administrators. And just as a quick commercial again, Sterling also does the 1095Cs if that's available to them. But I do have a special partner that will extract the information from my system and they complete the 1095Cs for a cost. It's not free, of course, but most of the time, I'm going to stop sharing now. Most of the time, the payroll companies, ADPs, Paycoms, Paylocities, depending on what package you buy, they will file those forms for you already. And if you don't buy that package, you can reach out to me with my partners like Lynn and other partners that I have. They will file them for you, provide copies to your employees, copies for your file, and then they file it with the IRS year after year. Okay, very important that you guys do that.
Great. Well, that's a lot of, you guys dropped a lot of knowledge, and seeing those fines are just scary. It's scary to think that, and, you know, I think the hard question and the reason why employers don't get group health, it's because it's so expensive. It's really, it's expensive. And even if you go, you know, with the cheaper plan where you're paying 50% as contribution, it's still very expensive. However, because you are in the state of California, and unfortunately there are regulations, and this is all, you know, we can't control this. These are all just mandates that are mandated in our state. And if any attorney were to get a hold of the improper documentation or no documentation at all, or, you know, they are able to prove that you're not complying with these laws or providing your employees with the correct documentation, if you're offering a health plan, like I always say, human resources, health benefits, they are separate departments. Human resources and health benefits go hand in hand because usually it's a human resources person that distributes this information and hands it over to the employee. But again, you have to remember that your human resources person is a human resources person. They are typically not don't have the certification or the education behind group health benefits. That's why it's very important that your human resources works hand in hand with your broker, because your broker could guide them into the right steps. So I want to thank all of you guys that joined us, participated. Thank you so much for being on this call. And if you want it, I'm going to go ahead and, you know, provide those slides for those who were not able to see it. And Lynn, where can my audience get a hold of you?
At lynn.demaria, LYNN.DEMARIA at sterlingadministration.com.
Perfect. And I'll go ahead. She's tagged on this page, but I'll go ahead and, you know, link her LinkedIn in the comments. And Mr. Adrian, where can people find you and get a hold of you?
You guys can call me on my cell phone. That's the best way to reach me, or through Rocio. We work hand in hand. So, you know, if you guys want to jot down my cell phone number, it's 951-385-3053. Feel free to call me or text me to discuss anything that you need on the benefit side. And then my email, a little bit complicated because my last name. So I'll say it a little bit slow. So it's JAUREGUI at Acrisure.com. So basically, A Howdigi at Acrisure.com.
And
Thank you,
again,
guys.
I'll make sure to copy and paste both Lynn and Adrian's email in the comment section in the next 45 minutes or so. But thank you everyone for joining us, and we are planning on having more educational videos, probably with more topics, because as you can see, we spent over an hour and a half talking about this, but it's because this department is so complex, and you could literally have a whole discussion on just the forms, on just the filings and the compliance, the new laws, and all of this. And we didn't even get into the 401ks, and that's a whole separate department. But it's also something that needs to be given. But thank you again for joining us, and we will catch you guys on the next one. Bye.
Thank you,
Thank you,
viewers.
guys. Take care.
Bye.